First off, let's look at Plains GP Holdings. It's the parent company, the managing partner of an MLP. That way I don't have to listen to everybody whine about K1s and taxes. But they own
ticker me up.
PAGP. This is everything that is required to move oil from point A to point B to the marketplace. It is pipelines for oil, natural gas liquids. They own barges, they own trucks, they own terminals, they own storage facilities, they own processing services and centers. If it's involved in moving gas, they own a bunch of it. They own it through an MLP structure. This is the general partner of that MLP, and they have an ownership interest of some size, obviously. So you're getting a 7% dividend. The stock has pulled back. It should not have pulled back. These things are cash flow and dividend machines. So when you see, and here's the thing to remember about the midstream, right? As long as we're using oil and gas, the midstream makes out just fine because they're on long-term take-or-pay contracts. They're getting paid almost regardless of what the price of oil and gas is. That does not have a monster impact on their business, but the psychology of oil and gas and all of that lovely stuff does have an impact. So a PAGP is absolutely worth a serious look in here.
Okay. 8% yield on this one too, 8+%.
Yeah, you look at a Devon Energy, oil and gas producer, big in the Permian, one of the biggest ones in the country. And this thing's pulling back in here 21% over the last year. Yep. And in the last week or so, it's definitely pulled back in here a little bit. And
really quickly, just looking at the DVN chart here, we had an ridiculously clean double top going back to 2022. This pullback level, we've already bounced once off this 30 level. This to me seems to be a real key support. This goes all the way back. This goes all the way back to 2015, and actually might even go back further than that. I'm limited on some of my data here, but in any case, look, this chart actually looks like it's at a pretty good spot.
Yeah, the thing to remember about Devon Energy is Devon has a kind of interesting. Well, more and more of these have been put together by the oil and gas industry. They have a shareholder return policy where a percentage of the money goes to buybacks and debt reduction, and then there's a fixed dividend. Okay. And then over and above that fixed dividend, which is paid first after all the bills are paid, they decide what to do, whether to buy back stock, pay an extra dividend, or pay down debt. Generally speaking, this dividend's highly variable. So when you look at 4 different websites, you'll get 4 different answers for what is Devon yielding. We think it's going to end up yielding right around 4% this year. A couple years ago, it was yielding over 8%. So it's all got, this one is tied real hard to oil and gas prices. Okay. But they're one of the premier players in the United States. I have a hard time seeing how, with natural gas demand from LNG, from AI, from everything else, is not a monster stock over the next several years.
Okay, cool.
Then
DVN, this also, just a fair warning here, DVN, this is a happy hour favorite. When we talk about energy stocks, this one always gets brought up on one of those. So good stuff there, Tim.
And then Coterra Energy, CTRA. Again, oil and gas across the United States, exploration and production. This is probably the best run oil and gas EP company in the country, in my opinion. The CEO is a brilliant guy. They're doing things with AI that no other oil and gas company is doing, not just in looking for oil and gas. They're using it to run and manage their business more effectively. So this is just a great little company sitting over there. And if it continues to pull back based on headlines, you have to be a buyer. Because remember, no matter how much we talk about drill, baby, drill and what we want to do, none of that is doing away with all of the extra demand for gas that's going to come from the fact that Europe desperately needs our LNG. That, nuclear and renewable, none of that stuff is going to solve our AI and technology driven energy demand here in the United States. Because you're not just talking about AI, right? You're talking about smart homes and smart cars and smart cities and the electrification of industry.
Mhm.
You're talking about a surge in electricity demand that we have not seen in a very long time in this country. We don't have the facilities to deliver that energy right now. The only answer here is natural gas or coal. I'm pretty sure that even in today's climate, that coal, it just might be a tough sell.
Yeah,
On a-
maybe.
you know, I am kind of bullish on coal. We like coal stocks here because they're just like stupid cheap. And the big secret that nobody wants to talk about is over 20% of our electricity and most of our overnight catch-up electricity is from coal plants. But China's building and burning the stuff like crazy, as is India.